Hello and welcome to FintechWire's Innovators podcast. My name is Ed Medina and I'm the editor of FintechWire. In this second part of a two-part podcast on insurance company competitiveness, we're talking about industry changes, data challenges, and some of the ways that insurers are addressing the unprecedented changes coming at them. We are joined again by Aaron Wright, Director of Strategy at Earnix, and Rob McIsaac, former executive principal at Novarica and CEO and president at consultant RPM Ventures NC. Aaron, start us off. How are insurance companies confronting all these changes, and what are the top three things they're facing?
Yeah, if I had to pick the top three things that they're facing today, I would focus on one, customer demands changes, two, macroeconomic factors, and three, data democratization. So let me explain what I mean. So first I said was customer demand. So customer expectations are continuing to change. When it comes to customer service, the bar has been raised across the board. Insurance companies aren't just competing against each other. They are working to understand customer needs that have been shaped by every consumer interaction that they experience. Our survey asked, what was the most significant industry trend over the past 2 years? And when you look at the answers given just by the C-suite executives, those who, in my mind, it's their job to maintain a strategic and long-term focus, they said that evolving customer expectations was the most significant industry trend they're focused on. We know that companies are working hard to improve their customer centricity and anticipate customer needs. So the second thing I mentioned was macroeconomic factors. Now, these changing factors such as supply chain breakdown and inflation rates mean carriers are working overtime just to get their head above water when it comes to profitability. Operational decisions around claims, underwriting, and pricing are going to be critical to getting back to profitability. Adapting to these changes requires carriers to be forward-looking, to project what's coming and be decisive in their new strategy, and then be agile in implementing the needed changes. All of this, while not abandoning their modernization and innovation strategies, that's going to be what's needed in the long run. Now, the final thing I mentioned was data democratization, which is really just a fancy way of saying that faster computer processing speed and new analytical techniques have opened up opportunities for insurance companies to get even more value from their treasure troves of data. Insurance companies must take advantage of this because they know their competition will.
Thanks, Aaron. We'll talk a little bit more about data here in a moment. Rob, what are some of the challenges that you're seeing?
Yeah, well, I think I'd like to build on a couple of things that Aaron mentioned there. One is that there is a heightened awareness of the need to focus on customers and customer expectations, which have dramatically changed, of course, as we've seen this remarkable evolution of technology around, you pick a starting point, the last decade. I think one of the things that's really critical, though, is that in some cases, insurance companies don't have a good perspective on just exactly what that means. There is a tendency in the insurance world to think about looking at the world from the inside out. So gaining insights and perspective because we have all this knowledge built up in these functional areas, but not really getting out and asking what is it that the end consumer or the distributor that's in between us is actually looking for. And this is where banks are tremendously focused, right? They look at the world from the outside in, secret shopper data, all kinds of competitive analysis. So I think insurance companies need to understand that figuring out how to get a better view of that is going to be really important because of a couple of things. One size fits all solutions run the risk of becoming one size fits none. Something that I saw happen when I was working on the P&C side of insurance companies, and we started to see a significant shift in how different segments of customers wanted to interact. Then I think another piece of it that's really important is understanding just exactly how the ecosystem for distributing products is evolving. One of the things that we've seen, and it varies by geography, is that as companies have moved more and more towards third-party distribution, it actually creates a world where they need to be able to consume information back from their distribution partners to more effectively tailor and customize coverages, products, services, experiences in order to be able to give things to people that they really want and need. And then again, this is something that varies significantly from geography to geography. So I'm going to just focus on North America for a moment. One of the things that's going on when you think about end consumers is the demographic shift here is both real and visceral. So I talked a little bit about that before in terms of baby boomers and the youngest one just being about to turn 60, which again is not old. But one of the other things that's really important is to understand by the end of this decade, 75% of the US labor force will be made up of millennials and Zoomers. And they have a different way of consuming information, a different way of thinking about risk, a different way of buying product. And so for many companies that have been very focused on that sort of linear one-size-fits-all model, now that bifurcation or trifurcation is going to be ever so much more real. And right back to Aaron's point, you've got a lot of data. Many insurance companies have a lot of data. Much of it is not very good data. So there is a whole cleansing process that needs to take place. And then the key is, how do you turn data into actionable information that you can then leverage and use? And as you start to want to consume it faster and faster, to be able to do more generative AI activities, to be able to do things that identify the next best offering, to identify risk profiles, to identify fraud, all of those things percolate through. And it again suggests that there are great opportunities out there for those who are willing to make the right investments. But there are also, again, great risks for those who sit back and somehow think that 1955 might be coming back.
We know that's not happening. Aaron, to follow up on your point about data, what are some of the challenges that insurers face regarding data? Perhaps gathering it, or maybe not having all the access they may want from an embedded relationship. How are insurers addressing this?
Yeah, good question, Ed. So when it comes to data, data is the most important thing, but at times it is the most difficult thing. We all know that there's lots of regulation around insurance. Using data, they have to make sure that this is data that is within the guidelines they've been given, that they can actually use it and incorporate it into their analysis. When it comes to having third-party data, bringing that in and processing it to tie it in with everything else they have is typically a fairly large IT process that needs to happen. Now, of course, if you want to use that in decision-making, it means bringing it in at a test basis and a batch basis, but then also having it available on an operational and production side. New data today, I'll say, is also coming into play when you look at all the unstructured stuff. So whether it's streaming data, it's like something from telematics or smart home, that data has to be changed from transactional data into something structured that can be used within the traditional and machine learning and other predictive analysis that are out there. So, whether it be any of the stuff we're talking about, data is both a gold mine, but it can be a problem that has to be overcome. Now, that's where technology and people and everything else come into play to really make sure that we can overcome these problems that come forward.
I see. And as we know, data is so important to some of these AI models that are out there. Aaron, what can be done to support insurers? Are these problems insurmountable, or are there solutions?
These are definitely not insurmountable. To face these changes is going to take talented people, strategic leadership, and the right technology to bring it all together. Companies that are weighed down by legacy technology and slow innovation will find it hard to keep up, though. The data science arms race, if you will, has already begun. The winners are going to be those that can effectively bring together the people, the processes, and the technology necessary to implement these solutions.
That's good to know. Thanks for that, Aaron. Rob, what do you see? What are some of the solutions that are out there?
I think, again, I would want to build on what Aaron said. I think that the people, the process, the structure, which frequently is the technology, are absolutely critical going forward. I think one of the things that sometimes gets lost is there is a foundational element around this, which is the culture of organizations. Culture is not a bad word. Culture actually is part of how companies evolve and how they make decisions and how they keep things moving within the boundaries of what they've agreed are acceptable behavior. Frequently, when you're trying to innovate, you're stepping outside of those boundaries. And having run innovation groups before, If you're somehow not inoculated, the immune system of the organization will actually work to squelch those kinds of activities. So making sure that the structure is set up properly and that there is an appropriate mechanism that keeps those things alive in a world where many times people have a vested interest in making sure that those things don't go forward, right? It's not that they're not mindful of the value of doing things that are good and proper for a company, but if in fact the organization values people or designates its value for people based on the size of the organizations that they run, well, then committing to things that are going to reduce the headcount for performing some specific function, that's going to be something that there is just an internal conflict there. And that's where some of the leadership that Aaron was talking about before becomes absolutely critical. And I think you also get to a world where the word governance becomes ever more important. Just because you can do something doesn't mean you should. Thinking about all of that data turned into actionable information, then taking the actions. Well, that's terrific so long as the actions are appropriate and there's some framework that suggests you know how you're going to do that. It's the kind of thing that can be mindfully thought of up front so you create the right kinds of structures so that the right decisions are made. So then again, back to the kinds of technology deployments that we're talking about, you actually can accelerate the benefit realization there because you know you're headed in the right direction.
Absolutely. Looking ahead, Aaron, now that the market research is done and the report is out there, what's next?
Well, the insights that Earnix has gained from this market research are being incorporated into both our short-term and our long-term strategies. One example is the research validated our observation, which led to a recent release of something we call Model Accelerator. Model Accelerator is a web-based Earnix module designed to streamline and accelerate the process of building and incorporating advanced models into pricing and underwriting real-time rating. Every leader in our survey stated their plans to incorporate machine learning models into their pricing and underwriting processes, but only 20% said they're doing it today. Providing our customers with even more abilities to build advanced models within Earnix, import cutting-edge models built outside of Earnix, and interpreting the findings from these models, and then incorporating and deploying them directly through Earnix will help our customers move forward faster than their competition. And you can expect to see more innovations like that from Earnix because we're really trying to focus on things which solve real business problems.
Sounds good, Aaron. Rob, any parting thoughts? What's next for RPM Ventures?
Well, again, it was really great to be with you today and explore some of these things that came from the Earnix study. I think that those kinds of insights are really important for senior executives as they make some of the decisions going forward. We live in a fascinating world. It's fast-paced. The changes are coming at us hard. LIMRA's CEO 2 weeks ago at their annual conference talked about the changes facing the insurance industry as being, and I now quote, overwhelming. I think that it's a lot of change for sure. I think that being planful and mindful about it and using data to help make decisions actually positions companies to be able to move forward in an appropriately cadenced kind of way. I think that this is not fire and forget. I think that one of the things that comes from this is that you've got to be prepared to be agile in terms of some of your decision making, because the fact set that we face here in the fourth quarter of 2023 could be very different than the fact set that we will face in the first quarter of 2025. So being planful and adaptive is going to be really important. I think for us, one of the things on my end that's really key is that our work with senior executives is helping to illuminate some of the challenge areas for sure, but also some of the opportunities so that people are able to make better, more informed, more effective decisions, and then don't become overly in love with the last decision such that they are somehow able to then think about how to adapt to the changing circumstances. I think if you look in the rearview mirror over the past year, the inflationary impact and then the slowing of inflation, the impact in labor markets, the changes in demographics, some of the supply chain issues that existed that then went away. It's been fast, much faster than most people are able to adjust and adapt, but that's how winners are going to get created in this market. So really interesting discussion today. Thanks for having me.
You bet. Aaron, Rob, it's been a pleasure. Thank you both for joining the show.
Thanks for having us.
This concludes the second part of our look at some of the challenges that insurers are facing and what they're doing to address them. If you're interested in more about this subject, you can find part 1 on FintechWire/insurance. And thanks for listening. We release new Innovators podcasts every week at FintechWire. We are also on Apple iTunes, Spotify, YouTube, iHeartRadio, Amazon Music, and Podbean. You can find links to all of this as well as transcripts at FintechWire/podcast. So check back for new episodes, and we appreciate you listening.